All you market traders and profit takers, this is your Forex University professor at yourforexuniversity.com. We're going to take a look into the end of the week ending of November the 7th of 2014. And as we normally do, we're going to start with looking at the results of the trades that we did with our quick view. As you can see here on the Friday's trading session, we paid quite a few expenses to ruin an almost perfect week of constant well, okay, a loss of one, but it was still a good week. We ended the week with a 721 pip gain. Friday turned out the one trade that we decided that we would go counter trend was the one that we actually made a profit on. We looked at our analysis on the week, I'm sorry, on the day on that Friday, and everything was pointing to us that we were going to have a reversal in trend, and that's exactly what we had. But we held on to what we were doing in terms of the trend because it was a strong trend. So there was also the possibility that, the reversal might not take place. Well, the reversal took place on Friday. Let's take a look at the weekly chart. We're starting here at the Aussie. This is the weekly chart. What we see on this tail is basically what happened from Friday, hitting its support levels in coming back at us. But nevertheless, because of the shorting that went on earlier in the week, if you were on that short side, you made your profit, and the expense you paid Friday was nothing more than a small expense to, comes in, especially if you're using your money management, you got your proper stops in place. Um, there you go. Notice, remember last week we talked about how we had this tail up here, this rejection area after touching the top end of the consolidation that we're in right now. As you can see from weeks ago when I told you that we would start consolidation when we hit this GAN level down here. And that's exactly what happened. The very next week we went all the way up to this other GAN level, came right back down to close, created the gravestone doji. I believe I started a video just because of that move that week. And then we climbed our way up again looking for the top and came back down, and here we are again. Now, if you take a look at the Fibonacci that we have on here, um, actually we would have to start it from this point here. There is latitude for a possibility of reaching this low point on the 125 profit taking level at the 84.48. So things might continue to move down, or because of Friday's movement, let's go to the 4-hour chart and get it where we can see it a little better. Move on over, look at what happened this week. There's Friday, move back to the upside. Now, here's the thing. Put your trend line up against this downward movement that came in last week after a correction. We're right here at it. Now, that means we're either going to break over it or we're going to continue on with the downward movement to that level that I just showed you here on the profit taking level. Pull it back up so you can see it right there. The 125 around the, once again, that's around the level. Let me put on my crosshair so I can get the right reading on that again. 84. 50, 84, 48, somewhere around in there, that mid 84s. Okay. Now, what's going to beauty of it all is a quick view is going to give us those levels as we approach it. 9 times out of 10, they'll come up in our quick view. Okay, so now if we don't cross this border this week, we might see some things, especially if we can get a move on this 4-hour chart to get a close above the trend line. We might start to see the consolidation continue. The consolidation that we have between these two GAN levels here. This could have been a simple head fake to the bottom, only to come back looking for this top again. And I'll tell you this, if we do break it, I'm looking at this trend line right here, this from between here and here. If we do break it and get a close above it, we might start a new move to the upside. We don't know that yet. It might not be a long-term move, but it could make it because we're coming into the Christmas season, and sometimes the dollar gets a little weaker, and we'll see. Let's move on over here to the euro. Pretty much the same things going on across the board. Some are a little stronger than others. We broke the bottom here on the euro this week and tailed our way back to the upside. Same thing with the pound. Here on the pound, however, this is something we want to pay attention to, this gray value area that was here, that was set up from last year. And we have a close below it now. And it's caught between the support of the scan level and the value area. As you can see, a few weeks ago when we touched that value area, we sprang back up, hit the other value area, and come back down. Just similarly to the way the Aussie dealt with the GAN levels. The pound is dealing with value areas, and it's got the GAN in the middle of it all, you know. And then the Kiwi, which is similar to our Aussie in terms of its behavior, is doing, like I said, across the board, everything is coming along, bouncing in and hitting support and holding it for a moment. We'll see how well that holds up. But let's go back to that Aussie. I just want to show you something. This tail right here, this doji with the high tails here, boy, that's just that, along with the fact that we have other issues going on with a retracement at the 382. We've got GAN levels, we've got trend lines, plus we've got this candle like this. That's bearish as bears can be. Let's move over to the other side of the dollar trading with the Canadian dollar against the US dollar. Notice we're going up. Now, this is bullish while things such as the pound are bearish, because this is the flip side, right? This is the dollar against the Canadian dollar as opposed to the pound against the dollar. So it's going to be the opposite. And here we go. So we're bullish up here on our way up. Look at the rejection area, however. That if we don't pass these highs right here, we're going to see that as a rejection area for the year. So now we just want to take note of it right at the moment. We don't want to claim it right now, but it's something to pay attention to. This we could even go as low as these wicks that are above us, because this was as high as it got at the beginning of the year. You see, and notice how we've been rejecting it, with the exception of this week. This week we actually closed up inside of here. So actually, the true rejection area is really up here. We want to get just above this high and this close. We can include this part of the tail, or we can be a little more aggressive and put it up here with the GAN level. And then by doing so, we want to get rid of this value area for now. And becomes, for starters, it's extremely huge, and it's based on something that we might not, see as valuable anymore. It's sometimes, with everything, they fizzle out and they have their moment. All right, so this we'll just watch, we'll just take note of and see how it works out. We still have support down here on this trend line, so things can come falling back to maybe this GAN level or even further. Let's look at the Fibonacci retracement levels for this area. Right now, Fibonacci is falling around the 111.30s or 40s. Let's see, what would the close on this one was close to it, 111.53. So around the 111.50s is their first retracement. It's now, if it happens with the next week or two, it's going to match up pretty well with this trend line here, as you can see. Yeah, I believe the strength is waning. Let's look at the RSI and see what kind of strength we're dealing with on this Canadian dollar move. Well, if we don't keep moving forward, if this rejection area holds, this will be a sign of weakness, because this high right here, these highs are higher in strength than this high, which is higher than these highs. So unless we can continue this move up and get past this candle's wick and get up into this value area and pass it, or at least hang out there for a minute before the year ends, uh, we might see this as an exhaustion area. One thing I'm looking at right now is the higher low made a harder dip than the last time. As you can see, this low and the strength of that low against the strength of this higher low being so much lower, that's convergence as well. Not as strong of an indicator as the tops, but an indicator nevertheless. Now let's get this out of here, get it out of our way. We just wanted to check and see what was going on with the strength. Let's move over to the franc. We want to see which one of these are the strongest of the three. The franc is spinning top here. And again, another rejection area right in here. Let's take a look at the yen. Let's see, no rejection. Well, there's rejection areas from a few weeks ago. It's Dragonfly Doji up here, and we're on our way back down. Oh, I'm sorry. This is a 4-hour chart on the yen. Let me get to the weekly chart. I knew that looked a little weird. Okay, yep, same thing. We got a little rejection. However, look at how much bigger our body on the candle is. So that's the yen. The dollar is doing better against the yen than it's doing against the franc. And the Canadian dollar, as you can see, the franc here is pushing back at the dollar at this resistance area, and so is the Canadian dollar. However, when we get to the yen, it's not pushing back so as hard. So we did create a value area right in here on the 4-hour chart. And we want to watch that as a possible retracement area. You see here we had this move that created this value area from last week. And we also have a gap that took place, which created another value area, which is right in this area where the profit taking took place from the last move a few weeks ago. So what I propose we do is go back to this weekly chart and readjust this Fibonacci retracement area to reflect where we are right now. And here we are. So go to the 4-hour chart and see where those retracements take place. And right under this second Yan level, we've got 50% retracement right here in this value area that we found from last week. It's very possible it could do that. We could get a hard move back to the downside, find the supports around here at this 110.26 area. The first level would possibly be around the 111.87, and with that in mind, we will put that little value area in here. See what it turns up. Okay, so that's pretty much it in terms of the way things are moving. We're gonna move on into next week. So far on the Australian dollar, on the 4-hour chart, we're moving into a possible bullishness. And on the weekly chart, of course, it's remaining bearish, as you can see. Right now, it's going to depend on the next the first few days of trading that we open up our new weekly session with. Because, see, this is the other thing you got to keep in mind. We actually, even though we had this push back up to the upside Friday, we still are closing below this support area. That's bearish. So we're still bearish on the long term when it comes to all of our pairs that are against the dollar, and still with a weak bullishness on the CAD, franc, and yens. And I guess you'd have to say a form of weak bearishness as well against the Aussie, Euro, Pound, and Kiwi. Notice when we talked about the CAD and the franc and the yen, we had that rejection area at the tops. On the others here, we have rejection areas at the bottom. So we'll see if these hold up, and if they don't, then we'll just keep moving with the flow. This is your Forex University professor at yourforexuniversity.com, wishing you all the best in your trading and that you are profitable. We'll see you next week.